My next guest is cautiously optimistic about 2018, but says the next recession could begin in 2019 at the earliest, and the risk of a market sell-off greater than 20% is high in 2019. AlphaOne Capital Partners founding partner Dan Niles is with me now to talk more about that. Dan, it's great to see you.
Great to see you too, Maria.
Thank you so much for joining us, and so much to talk about, in particular about Facebook and technology, something you know a lot about. But first, let's talk about the broader market here and the economy. You think things are going to turn possibly recessionary in 2019?
Yeah, I think as you get towards the end of 2019 and you have some of the positives for this year, like central bank stimulus, et cetera, starting to reverse, that could be an issue. And, you know, there's a slide I gave you about how long this bull market's been. It's been 107 months that this has been expanding.
Without a 20% correction.
Without a 20% correction. And that's the second longest since World War II. And when you've had these long-lasting bull markets end, you think about the one that ended in 2007, market went down 57% for the S&P. The one that ended in 2000, which was the longest in history at 114 months, market went down 49% on the back of that. So, you know, this has obviously been a wonderful expansion. The S&P is up over 300%. But I think what you need to worry about is, okay, this next correction, when it happens, it's likely to be vicious. It's likely to be hard. And the central banks don't have that kind of stimulus anymore because their balance sheets expanded from $6.4 trillion at the end of 2017. Those balance sheets of the big four central banks, that's up at $20.6 trillion. And, you know, so they don't have as much ammunition anymore.
Yeah, and I think one area that you point out is Apple and its supply chains. And, you know, you called this before it actually happened. And it happened this week where you saw Taiwan Semiconductor get taken to the woodshed, and it had a lot to do with Apple. Tell me what happened.
Yeah, so if you look at Taiwan Semiconductor, it's one of the greatest semiconductor companies ever. They have more than half of the foundry capacity in the world, which means they make chips for other people. One of the companies they make chips for is Apple Computer, and the estimation is that's about 20% of their revenues. People were thinking Taiwan Semiconductor would guide their June quarter coming up to be flat, maybe slightly up. Instead, they guided down over 7%. So you go, wait a minute, that's 20% of the revenues, and they said it was high-end smartphones, which is code word for Apple. So, you know, if that's what's happening to them, you have to look forward and say, well, what's going to happen to all the rest of the companies that are going to report? And what does that mean for what's going on with Apple's business?
So you think that we're going to see the supply chain struggle, and you also think Apple is going to have a miss when it reports?
Yeah, I do.
So Apple reports in May. Watch for that. Dan thinks they're going to miss on the numbers. Google, parent Alphabet, you also think may miss?
Yeah, I think that one, though, I like, you know, quite a bit over the longer term. I think the problem with Google is the exact opposite as with Facebook. With Facebook, they guided expenses up 45 to 60% this year before this data breach stuff ever happened. When you look at Google, they have expenses modeled for some reason. Wall Street does. Google doesn't guide. But Wall Street has expenses modeled to go up by the slowest pace in the last 5 years. And I think the expenses are actually going to be a bit higher. I think the revenues will be fine, but I think you're going to have a problem on the margin front, which is why I think the EPS is going to have an issue. But that's one of those stocks that after that, you know, I think is in really good shape going forward.
You've loved Facebook for a long time. It's been your #1 position. You made some moves. Let's talk about Facebook.
Sure.
Do you think this data breach, these new changes that the company is coming out with, creates a different fundamental in terms of how they make money and changes the reason to own the stock?
I really don't think so. I mean, when I look at Facebook, you've always had privacy settings. Most people don't turn them on or work them as much as they could. Having said that, I like having ads shown to me that are relevant. I don't want to see baby food ads when my kids are 17 years old. Like, I'd rather see ads for tennis gear, etc.
Stuff that you're interested in.
Exactly. So I think with Facebook, I don't see it really affecting them that much. I mean, and a good analog you have for this is, remember, Google had a problem back in March of 2017 where they were actually showing ads next to extremist videos. But if you go back and look at it, it really didn't affect their business one iota on the revenue line.
Really interesting and smart conversation. Dan, great to have you.
Great to be on.
Thank you so much for joining us. Dan Niles is AlphaOne Capital Partners founder and partner.